Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
I know. Stand by. 2 minutes ago, here into the closing bell on the iconic trading floor of the one and only New York Stock Exchange on this Wednesday, July 1st, the first day of Q3, the first day of the second half of 2026. Who better for his perspective to kick off the show than the Einstein of Wall Street? Peter Tuchman, thank you for being here.
Always a pleasure.
So what's going on? It looks like the Dow fractionally may have another record close for today. What do you see across the tape for the first day of the quarter?
I wouldn't hang my hat on that. I don't think that's that significant. I think, you know what, usually the first day of the month and the quarter, there's a lot of money being put into the market, right? A lot of the funds and a lot of everybody puts fresh cash into the market. I'm not really feeling that a lot today, right? I think the market is just trying to figure out its footing. There was so much that happened in the last couple of trading days. I think people are just still in a little bit of shock. I think it's a little July 4th weekend thing going on, right? There was so much rotation and movement around the Russell reconstitution, the S&P, right? The end of the month, the quarter, the half, all that went into the last couple of days. We saw that, massive volume and all that. So I mean, I don't want to call today a nothing burger by any means, but we're not sealing it. I kind of think tomorrow and Friday, well, no, Friday's not a trading day, but tomorrow we may see a little bit of fresh cash come into the market.
Okay, and overall maybe light volume for the week, given it's a 3-day holiday weekend coming up,
100%.
the 4th of July. If I don't see you, take good care and all the best for the 4th.
It's okay, I'll be here.
All right, we got the
Always a
U.S.
pleasure.
Secret Service here to ring the closing bell at the New York Stock Exchange. We got a lot more taking stock on the other side of this. Time now for the close. Got the U.S. Secret Service, and a very special thank you to you, gentlemen, for all being here. Thank you for your service, and thank you for joining us on the tape on this Wednesday, July 1st. The S&P 500 in negative territory, 0.2%. The Dow down 0.02%, that close to another record high. The New York Stock Exchange Composite Index in negative territory, 0.4. With the small caps, the Russell 2000 also down 0.4 on the day. In the S&P 500, fresh money flowing into telecom, financials, and discretionary. Your S&P 500 laggards, industrials, utilities, as well as tech. Pretty fascinating start to Q3 in the Dow Jones Industrial Average if you're a nerd like me, because the 3 worst performing Dow stocks of the year are 3 of today's leaders: Salesforce, Microsoft, and Nike. And Caterpillar, which is the strongest name year to date, is actually the laggard today in negative territory, about 7%. The Mag 7 tech stocks moving mostly higher on the day. A really nice showing for the start of Q3 from Meta. Shares up about 8.5%, and Nvidia selling off 1%. Fair bit of profit taken across the tape today. Memory stocks, a lot of tech names, the major quantum players, and the semiconductors as well. But the best part of the show is I get to interview friends of mine who are far smarter than I am. Let's bring in one of such friends, Jessica Inskeep, Director of Investor Research at StockBrokers.com. Welcome back to the show.
Thank you for having me, JD. Excited to be here.
And a very happy start to Q3.
It is.
I don't
and
remember
the
what
second
number
half of
we
the
are.
year as well.
Talk to me about the biggest AI opportunities that you are seeing, that you are following right now. Mega caps, infrastructure, something else altogether?
Well, I think that the hyperscalers are still an incredible opportunity, and we have been rethinking about CapEx spend. So with a lot of the 0% interest rate that we've had for quite some time, we have been rewarding companies with buybacks and high free cash flow, and now they suddenly have time to do that with investments. And I think we need to be a little more open-minded now that hyperscalers are investing in the fruits of their dividends. And the way that we can actually see that is earnings expectations are increasing. So the good in that is that looks like price can lead us higher. The risk in that is the bar is rather high. So we need to make sure that investment has earnings follow through. But the best performing sector, it's within from pre-Iran conflict to now, is technology driven by stocks, of course, and semiconductors.
Oh.
So there's room for some normalization, and that rotation I think is healthy.
Jess, it's the first time you and I have spoken really since Kevin Warsh officially took the
Yeah.
reins down at the central bank. You and I, we love this stuff.
We do.
What do you think a Kevin Warsh-led Fed means for the general AI theme here on Wall Street? It's an interesting crossover maybe we're not talking enough about.
Well, I think it's positive for artificial intelligence, mainly because it's a task force where we're thinking about the impact of productivity. So I think it's good because the administration that has a very good environment is number one. There is this push and pull. So if we think about capital markets and the Federal Reserve, they need each other. We need capital markets from a supply and demand equation, and capital markets need the Federal Reserve for funding. So they do rely on each other, so I think it's interesting. But I do think a Kevin Warsh environment is allowing us to be open-minded. He is rethinking data with his 5 task force. We're understanding why, and there are differences. I do have some concerns with the balance sheet and what he's going to do there, but I do appreciate that there is a task force so we can at least understand that, and he said he is going to communicate before there are any major changes, which is extremely important. So I do think it's good for artificial intelligence because that requires open-mindedness. And this is an open-minded Fed, and I think the biggest mistake that we can have within a market is not being open-minded. So positive all around.
Here's one of the big headlines of the day. Meta developing plans for cloud infrastructure business, maybe directly pitting it against the Google Clouds, the Microsoft Azures of the world. What do you make of a headline like this, and what does it mean for the state of the AI trade right now?
I think it goes back to agility and, again, open-mindedness. This caught me by surprise. I was not expecting this. But we saw with SpaceX, started renting out their data centers initially for what was going to be for Grok. We saw Meta pivot before, so they're pivoting again into real revenue. So being open-minded and understanding that these companies are extremely agile, I think is important, and it's boding well for Meta, and I think it's good for AI, but it brings me back to AI infrastructure. The picks and shovels are extremely important right now, and that's where I think the real opportunities are.
What do you make of the general AI CapEx boom, and how are you thinking about what we may see for the second half of 2026?
I want to see earnings follow through. That's going to be extremely important. Last time we actually talked on your show, I did a deep dive into what causes recessions, and one of the first things that is looked at, according to the NBER, is a decrease in GDI, so that CapEx spend that we're seeing. I would look for that to deaccelerate. That doesn't look like it's happening anytime soon, but what I do see is companies getting creative. When we are now we're issuing equity. SpaceX immediately issued bonds. I don't know if you were thrown off by that, but I certainly was. But like I said, that push and pull with capital markets and the Federal Reserve and central banks, what is causing a yellow flag or a red flag is the 2-year yield. That is still hitting 52-week highs. The 10-year has come down since Kevin Warsh spoke, but the yield curve's flattening. So the 2-year is still at a rate almost it was at the height of the Iran conflict. And if you draw a chart of the S&P 500 and right on, we can handle these elevated yield, but the second we hit a higher high, that's when the market suddenly downturns. And that's short-term inflation expectations. So really, the market is saying to me, we believe that this conflict could be resolved, that there is perhaps a peace deal on the table, there's 60 days of headline risk, but we do not believe that it's removed from short-term inflation expectations, thus the elevated 2-year yield, and that's something to watch.
The great Jessica Inskip, Director of Investor Research at StockBrokers.com. Thank you for joining us as always. Nice to see you again.
My pleasure, JD.
All right,
always.
Robbie, you'll grab your mic and we'll talk with you again soon.
Sure.
All right. Wow, Broadway is wide open for us here, Todd. Here are the few of the top analyst calls that moved the tape this morning. First up, Wolf analysts upgrading Fox to outperform. They say the company's combination with Roku should be a big growth. Next up, Evercore ISI, upgrading Old Dominion to outperform. They say at these levels, trucking, shipping companies look pretty good. Old Dominion up 37% on the year. Thank you, Sarah. Finally, Raymond James beginning coverage on Birkenstock has outperformed $52 price target. That is 20% upside potential off of these current levels. We got to talk about software stocks. They had a nice tape here today to kick off Q3. Salesforce up more than 4%. Google upgrading the software giant to a buy. They call shares compelling at these levels. Shares broke down below that 165 support level last month, in positive territory for the day, but still down about 38% year to date here in 2026. In part 2 of their conversation, Cheddar's own Justine Miller and Psychonic CEO Dr. Adil Akhtar discuss physical AI, the company's NVIDIA partnership, and a lot more. Take a look.
Hearing more about this concept of physical AI. So tell us a little bit more about what that term actually means to you and how Psyonic's work with NVIDIA's AI training platform is actually helping advance this field.
Yeah, and so the thing is that one of the biggest things that have unlocked like robots to do all sorts of amazing things recently is all the advances in AI that have been happening. And so we started this partnership with NVIDIA where we use their entire AI stack from Isaac Lab to Groot to take in the data from the Ability Hand when human users are using it, and then going through that software stack to train the robots in simulation and then to have NVIDIA has been an incredible partner to us in enabling that whole workflow to happen.
Yeah, it seems like these partnerships are so important with different people working on kind of different aspects of this industry and how you can really put it together to solve the problem that you're trying to solve here. Tell us a little bit about some of the broader industry implications of this kind of convergence between human-centered assistive technology and next-generation robotics, because it really does seem like you're kind of bridging the gap and bringing a lot of different elements together here.
Absolutely. And our goal is seamless integration between humans and robots. And so we recently got a grant from the US military to develop microwire electrodes that you can implant in your nerves to get really fine dexterous control of the hand. But then also, when you touch the fingers right now, you feel a vibration that lets you know how hard you're pressing. But with the nerve implants, we can stimulate the nerves and make the sensation feel like it's actually coming from your missing hand. And unlocking that for humans is going to be critical because then it feels like it's an extension of your body as opposed to just being a tool that's at the end of your body. And by unlocking the dexterity for humans, we can then in turn unlock it for the robots too. So what we build for humans benefits robots, and then the volumes on the robot side can subsidize the cost for humans so that more people can afford bionic limbs. So we build for robots benefits humans, and it's an incredible ecosystem that benefits both industrial manufacturing and humanity worldwide.
Yeah, it does really seem like, again, they just go together so well here. Tell us a little bit more about that dexterity piece of it and how that the nerve part of that works. So that's just fascinating to me. I think we can imagine a hand doing something like that, but actually having the nerve part integrated so that there's feeling. How does that really work?
Yeah. And so the thing is right when we're controlling our own natural hands, right, we're basically telling it to, you can move each individual finger, but when you're grasping an object, like if I'm grasping this cup right over here, right, I'm not really thinking about like, oh, I'm placing my fingers here. I'm thinking about how much pressure am I applying to this so that the mug doesn't drop, right? So I can grab this with the hand and I can feel through the vibration exactly how much force that I'm applying on this, but it still feels like a vibration. To really unlock that, to feel like it's your own natural hand, we need to basically trick your brain into thinking that the hand is your own. And by stimulating your nerves, it sends that signal back to your brain to make it actually feel like it's coming from your missing hand that isn't there anymore. And we've actually done this with brain implants before with collaborators at the University of Pittsburgh, where they had people who were paralyzed in car accidents, and they installed brain implants in them, and they could wirelessly control each finger, but then they blindfolded them and touched the fingers, and they could detect which finger was being touched because it was stimulating their brain in that area. And this is the future that we're heading in, right? The seamless integration between humans and robots.
Wow, well, this is incredible. We really appreciate you being here today and talking through all of us. I can't wait to see what happens with this and how this can be applied in so many different ways throughout the world. So Adil Akhtar, founder and CEO of Psyonic, thank you so much again for talking through this all with us and for sharing the hand with us. Thank you.
Thank you so much.
Welcome back to the show. Joining me now on the trading floor of the New York Stock Exchange, not just a great guest, but also a very good friend of mine, Tony Edward, author and host of the Thinking Crypto podcast. Welcome to the show, my man. Nice to see you.
Good to see you, JD.
Bitcoin price action, relatively range bound. You and I were just looking at the price there a moment ago, right about or just under 60,000 for everyone at home wondering, what the heck is going on with this thing? Tony, what the heck is going on with this thing?
Bitcoin story, right? A lot of volatility, but I have some good news, JD. The signals that have flashed at the previous bear market bottoms are appearing. So we are seeing bullish divergences forming on the weekly chart. We're seeing over 50% of the Bitcoin supply being held in unrealized loss. Those are the signals that have flashed in the previous bear market bottoms. So I think we're very close to the Bitcoin bottom. I think this is a great buying opportunity if you have a long-term outlook. And don't be surprised if later this month we get a very strong counter-trend rally, because it's a lot of fear out there, the market's oversold, and potentially the Clary Act can pass.
Let's talk about the Clarity Act. Yeah, actually, let's get. That was not going to be my next question, but I'm glad you mentioned it. We've been following along with the drama on Capitol Hill. There's been no shortage of political theater. There's lots of finger pointing. We're getting closer to the midterm elections. What is the latest, and how close are we, you think, to actually making it a reality, Tony?
So 2 major senators came out and said the bill will make its way to the Senate floor this month. So we're anticipating there's going to be a lot of movement with the Clarity Act. There's no guarantee it gets passed, but Senator Lummis, Senator Thune have given the word that it will make its way to the Senate floor. And there are some headwinds, such as the banks pushing back on the stablecoin yield, as well as DeFi. Those things could hold up the bill, but also President Trump's crypto holdings. Many Democrats want to use that against him from an ethics standpoint to say, we're not going to pass this bill because the president is profiting from it. However, there could be a compromise where they get past that and this bill is passed into law, and then it will go to the House and then to President Trump to be signed. That could really spark a major rally in crypto.
Can I get your take on Strategy, the artist formerly known as MicroStrategy, Michael Saylor? We've had Michael Saylor here on the show. People see these headlines, they're selling, they say, uh-oh, what does this mean? Give me some good faith context and perspective. When you see the strategy-related headlines, what do you make of it? And maybe could better inform how the rest of us think about those headlines.
Boy, I'm a bit bearish on Michael Saylor and MicroStrategy. I don't like what he has done. I liken it to what the banks did in 2008, levering up real estate as well as mortgages. Michael Saylor is taking Bitcoin and leveraging it up to the max, high risk. But my hope is that there isn't a major collapse, because that could be detrimental to Bitcoin and the crypto market. My hope is that he can make it through, but he is introducing a lot of risk into the crypto ecosystem, obviously with Bitcoin. And recently he's had to sell Bitcoin to pay out the yield on Stretch. So hopefully Bitcoin starts to rally and he's able to come out of this in a good spot on the other end.
I would like to see, okay, I'm just getting told to wrap. Quickly, if you can, your new partnership with FinTech TV, congratulations. What should people know?
Absolutely. So we're going to be doing a crypto water cooler series, recording here at the New York Stock Exchange a couple times per month, and we're going to be syndicating the content that covers crypto news, so you get the latest updates. Excited about this partnership.
My man, the one and only Tony Edward, author, host of Thinking Crypto Podcast. This was so much fun. We should do this again tomorrow, you and I.
Absolutely.
Yeah, we'll see you again on the JD Durden Show tomorrow. Thanks for being here. A lot more Thinking Stock coming up from the big board after this. Welcome back. Time for a few headlines in the worlds of fintech, crypto, and AI. At this hour, the crypto majors are all in positive territory. Next up, the Trump White House lifting export restrictions on Anthropic's Mythos and Fable AI models, restoring global access after a security agreement with the U.S. Commerce Department. Finally, the President of the United States disclosing more than $1 billion in crypto-related income in 2025, driven by World Liberty financial token sales and royalties from the president's meme coin. It's a sentence I never thought I'd say. The New York Stock Exchange's very own Ashley Mastronardi sat down with retired Lieutenant General Rick Waddle to discuss how to navigate geopolitical risk in the equities market. Take a look.
The 23rd Annual Energy Infrastructure CEO and Investor Conference kicked off in Aventura, Florida. And joining me is one of its keynote speakers, retired Lieutenant General Rick Waddell. Rick, welcome.
Thank you. Happy to be here.
So you delivered a keynote today that focused on geopolitical risk. What do you want people to take away from it?
Well, the world is a dangerous place. I don't know that it's any more dangerous than it's ever been, but that depends on which decade you look at. But what I told people in there is that they have to expect political change. That one of the things that we have a tendency to do when we work in business or even in government geopolitics is we assume a rational actor model. And we look at other people and we assume that they're going to behave rationally. But we define rationality as what I see as rational. And so one of the most difficult things is to look at situations through our competitors' eyes to determine what they might find rational. So, and you just expect, like I said, political change, and political change drives a lot of, if you will, waves within the energy business in particular.
Especially in Iran right now with the conflict, we're seeing oil prices spiking. What is your outlook for that conflict?
I think it'll drag on for some time to come. Now, is that weeks or months? Hard to say, because you have two mutually contradictory negotiating positions between the United States and Iran. Iran has expressed once again that they want all U.S. forces removed from the Middle East, which would of course expose our Arab partners and allies as well as Israel. And then they also want reparations for the damage that's been done to them. And then they want the U.S. to acknowledge that they'll control the Straits of Hormuz going forward in some way. And I just saw today that they want to control fiber optics and telecommunications cables passing through the seabed of the Strait of Hormuz. Okay, on the flip side, the Trump administration, President Trump's been, I think, very clear from the beginning that Iran must end their nuclear enrichment program. Because if you want a peaceful nuclear enterprise, you don't need enrichment. You only need enrichment if someday you think you might enrich your uranium to the point that you could make a bomb. And so the president's been categorical about that from the beginning. I think he's offered them 20 years without enrichment, in which case 20 years the whole world will have changed significantly since then. But the Iranians have said they might talk about that in the future if we concede those other points up front.
Well, investors, you're talking about it impacting the markets and the larger economy and world, especially with the oil prices. Investors love certainty, and every time there's an indication that this war is ending, you will see the markets go up, and they are behaving now as if, with the S&P 500 hitting all-time highs, as if it's ended. It's almost being priced in that it's ended already. Do you think that end will come anytime soon?
I don't think it'll be days. It may be weeks. You hope it's not months. And the reason I say that is the markets do shift, right? So, for example, when the second Ukrainian invasion occurs in February of 2022, people expected the energy markets to be in greater turmoil than they've turned out to be. The energy markets shifted. Now, you may remember that the Biden administration would refer to the Putin price hike at the pumps because the war did drive crude prices much higher, and that affects U.S. gasoline prices. But the markets shifted, and what you had crude prices in the last couple of years with the war still raging in Ukraine, with Russian energy supplies still hampered by sanctions, dropping into the 60s. And so if you look at today, you've had spiked prices depending on the grade of petroleum up well into the hundreds of dollars a barrel. But last week they were like $92, $93 a barrel, depending again on the grade, West Texas Intermediate or Brent. And so if you look at the Energy Information Administration predictions that they put out in the last 10 days, they're expecting world crude oil prices to settle into the mid-70s sometime by next year. That presupposes that the markets will have shifted. They don't say that they expect the conflict to end. They just say that this is where they think the crude prices will settle.
All right, retired Lieutenant General Rick Waddell, thank you so much for joining us at EIC.
Thank you.
Time now for the latest headlines in the world of startups, raises, and rounds for your Wednesday afternoon. First up, AI startup 12 Labs raising $100 million to expand its platform that allows AI search, analyze, and understand video content. Next up, Starwood Capital raising a record $10.2 billion fund with up to 35% uniquely earmarked for data centers as AI demand reshapes commercial real estate. Finally, autonomous driving startup Wave launching an $85 million employee tender offer at an $8.5 billion valuation as the company gears up for robotaxi pilots with Uber later on in 2026. And now Money 2020's very own Scarlett Sieber back with a whole new edition of Jargon Translator. That's, of course, where she puts complicated finance terminology into language that anyone, even me, can understand. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is embedded risk. Embedded risk is risk that doesn't look like risk because it's hidden inside products, platforms, or processes. When finance gets embedded into apps, workflows, or automation, risk doesn't disappear. It just becomes harder to see. Embedded risk shows up when lending is invisible, payments feel frictionless, decisions are automated. That risk, it still exists, it's just abstracted away from the users. Let's fast forward to today. As fintech and software merge, companies often monetize convenience while quietly absorbing that exposure. Embedded risk explains why problems often surface suddenly, not gradually. The risk was always there, it just wasn't visible. So with that, that is your Jargon Translated. If there's a term that you want decoded before it becomes a headline, put it in the comments and it might just make the cut. In the meantime, back over to you.
Tomorrow on Wall Street, we will get weekly jobless claims as well as continuing jobless claims. We'll get the June jobs report and the latest state on our national unemployment. Thanks for watching today's edition of Taking Stock. Have a great Wednesday night. We will see you again tomorrow.